Welcome, everybody. Welcome to this episode of learning exactly what we need to do so we don't break the bank, guys. We've got what are our borrower behaviors that are going to help us get funding, and in this episode, we've got some things that might be the canary in the funding coal mine. Um, First of all, there has been a move recently from Chase specifically, and remember the tier 4 banks are kind of the what I call the bellwether, right? They're the bellwether when they make a move. That it's likely, not always, but there are times that the other banks will follow. The only problem is that some tier twos, generally speaking, there are 2 to 3 of the tier 4 banks in every regional tier 2 footprint, right? And so sometimes the tier 2s don't follow suit with the tier 1s in order to be more competitive or to offer things that the tier 1s stop offering. We saw this a couple months ago when Wells Fargo announced, hey, we're going to stop doing personal credit lines, and then all of a sudden they pulled back and said, nope, we're going to keep, for if you have certain funding criteria, certain credit scores, or certain borrower behaviors, internal performance data, we're going to give those back to you. And they reopened them. So right now there's been both from our clients, from students, as we've had some requests of Chase for borrowers who had been building relationships with them over the preceding few months. They're now asking for those credit lines to be approved with collateral. And it's coming back on letters saying, hey, if you we'd like to continue this process if there's collateral. Sometimes while we're vetting, they're saying, yeah, due to COVID. And the number one reason for that the branches, the branch managers and or the rejection emails or the manual review emails are mentioning security or collateralizing these business lines of credit is because of COVID. Now, the second we heard this, a couple of yesterday, we had some intimations at the end of last week. We checked out with some Eastern United States Chases, and they validated that these we were vetting. That's been validated in the state of Texas, and likely to be. And we've also got some calls in where we're vetting Chase banks in California and some of the larger northern and southern California metropolitan areas. So what does this mean? Well, first of all, we talk about it all the time that during times of financial stress and that I've been through 3 big recessions and 1 mini recession. And now I've never seen this, where the Fed is talking about the overnight cost of funds is 0 and likely to stay that way through at least the beginning of next summer. They said mid to 2022, we're literally going to put a halt on increasing the inflation or increasing the cost of funds, right? The prime rates. The problem is that people are saying that inflation is occurring. And again, based on our previous conversation in one of my recent podcasts, we have to define our terms. What is inflation? Inflation generally refers to the overheating of the economy, except our economy isn't overheating. Because of COVID, we don't have a bunch of stuff. So there's a ton of scarcity in the supply chain, which is causing the exact same symptoms of inflation, which means prices on many, many different types of goods are increasing. So inflation, not inflation. I don't want to get caught up in the terms as much as I want to say that banks are dealing with their cost of funds is 0. And yet there is the cost of funds is 0. And yet there are individuals or there are, even though it's 0, there is a scarcity in certain supply chain issues, and costs are going up. So what do you believe? Well, of course, they're conservative institutions. They've always been, for 500 years, they've been for conservative institutions. And so they're going to play it safe. In this case, it may look like wanting to secure the they want to secure the credit lines. Now, we have not heard about securing business loans. There's certainly no discussion about securing business credit cards. So what does this mean for us? Well, the funny thing is that, think of it this way, and I've shared the story dozens of times in my boot camps or otherwise, but SunTrust Bank, which has now merged with BVA Compass, I believe, to become Truist, which is, I believe, the fifth now largest bank in the United States. Their vice president said that it cost a loan needed to be at least $36,000 and prime plus 4% in order to be profitable in manual underwriting mode. Right? If they're going to manually underwrite a loan, well, you can't do automatic underwriting and collateralize it. That requires documentation. It's all now manual underwriting. So here's my prediction. I totally understand Chase and maybe other tier ones or tier twos may follow suit, but there's going to come a time when they cannot be profitable at these current interest rates. But they can't be profitable doing manually underwritten $20, $30, $50, or $100,000 loans. But if it's securitized, just so you know, we're not capped anymore, you guys, at $100,000. We could go 250, 300, depends on the security. Rarely do they need cash security. These aren't cash secured lines. So we're currently doing our due diligence on your behalf, and we want you to be part of the Funding Hackers group. Because we're going to do a post-show breakdown of this. We're going to be working on what are the criteria, investment properties, a real property, et cetera, to be able to secure these loans. Now, how long can they do manual underwriting and not be profitable on these loans or on these lines of credit? And if they're not profitable on these lines of credit, there is a huge opportunity to be able to they're going to be doing, notice the conundrum. Their cost of funds is zero. But how can they legitimize raising the interest rate for risk that's now being secured by hard assets, real estate, cash, or otherwise? So there is, once again, I've been saying this for all of our breaking news that we've been doing, especially now's the time we don't want to break the bank. So we're going to have this conversation in Funding Hackers. We will keep you posted. Make sure that you join us. If you're already a member of the tribe, make sure you join Funding Hackers and go into the Funding Hackers Facebook group. The links are there so that you can join us for this live discussion. But do not fear the target, as we predicted. The target is getting smaller. The feds are not going to be putting in as much capital into the system as they have now. There's an easing of the amount of bonds that the Fed has been buying, et cetera. And so there's a paradox. And again, in all the many recessions I've been through, we've never seen this paradox. Zero cost of funds for banks and the symptoms of inflation simultaneous, and no plans to raise the interest rate because it's not inflation. We're not overheating. The other thing I'd like to bring up is that it's so funny how nature abhors a vacuum. So remember how many there's been all this brouhaha over the summer about tens of millions of workers disappeared, right? I made a joke that it was the rapture, and we literally lost tens of millions of our fellow citizens. The financial rapture. People decided, say, hey, if I'm working at home already, maybe I get into becoming an entrepreneur. Maybe I can do something on the side and make it my side hustle, my main hustle, etc. The interesting thing is that now there's a new the feds and are working on making sure that companies with over 100 people, everybody has to be vaccinated or have access to tests on the weekly. And at the same time, we have already today, we've been looking to hire another advisor, and it's been a little slim pickings out there because the labor pool went down, and all of a sudden people are interested in becoming an advisor because they want to leave a company that's demanding a vaccination. It's so funny how I'm not one way or the other. Vaccinations, testing, non-vaccine. I don't care what your preferences are. I find it fascinating that where there's a hole in the market, other things tend to fill it. And so stay posted. We will keep coming back to you. Same Fundable time, same Fundable channel. We will keep you updated with what's going on with Chase. We'll see if any new. I have huge lines with some of these tier 1 banks, business lines, and I'll keep you posted. Do they lower the credit limits? Do they refuse additional increases? Well, I've got a spectacular reputation implementing the very things I teach you in the boot camp, and I'm watching to see how they treat the money that they have already pre-approved me for. So we will get back to you more as this breaking news comes to pass. For those of you on our in our funding hackers, let's head over and we'll do our post-show breakdown and start the conversation out there and kind of get your guys' questions answered. We will see you on the inside.